it's on us to I guess dig a little deeper when we have concerns or questions, or someone wants to share with us what their thoughts and ideas, and they might be talking over our heads or ahead of our level of understanding. It's up to us to dive into that research tunnel. Do you agree, Maurice?
Oh yeah, most definitely.
Okay, well, I tell you what,
Can I ask you a favor? Can you
yeah,
release the restrictions on my recording so I can record this call as well?
I have that on there. Oh
I
man,
believe so.
well, brother,
It told me to ask the host. I was like,
yeah, everybody should be able to record. It's a free country, and a man should be able to do what he. Okay, let's see. Did that work, man?
let's see. Yep. Thank you, sir.
All right.
I'm good to go
Well,
now.
we're loaded. We have the room. I'll do the quick roll call. We have Cookie. I just saw Cookie on I don't watch Power, but I think thinking that's her. Cameron, Charlene, Charlotte Baker, Cookie again, Deisha, E.T. Mitchell, J.M. Smith, Juanita, K, Keisha, Kevin Cannon, K.D., Kylan Chavis, Larry Bernard Sr., Larry Bernard Jr., Nikita Tippins, let's see, Narva, Nadia, PJ and Liz Hardaway, Penny is not here tonight, Renata McPhail, Robert Selena Hall, T. Simmons, I believe, Towns, iPhone, Willie L., Willie D., and Taylor, Tammy Johnson also. Well, guys, this is the Sunday edition of the Market Wrap Up with JD and Mo. And we're going to this is market prep for this upcoming week. So I'd like to welcome you guys here, and we're going to get started. First off, if you have things to do, you can play us in the background, but we're going to do we're going to do charting. We're going to talk on some just different economic factors, current events. And I call Maurice Jackson basically our resident economist. He's here. So guys, use the chat bar, utilize the chat bar. If you have a question, drop it in the chat bar, and if I'm talking, Maurice will check the chat bar, and we'll address certain questions and concerns or ideas. So without further ado, let's jump into it. Hey Mo, how was your week, brother?
My week was good. My week was really good, really chill, as most people are, but no complaints.
Okay,
How
good
about
deal.
yours?
It was great, man. I had a good one. I want to tell everybody in the room that I'm I'm a long-term investor. I mean, from like probably age 14 was my first introduction to it. A little bit earlier, but I've also over the years I've taken up trading. But
Mhm.
I'm long-term for generational wealth for me. Investing is the key, and but I do love trading, and I just want everyone to know that this will be a hybrid discussion on that. So if you have questions, you chime in. And again, like I said, investopedia.com is going to be one of the spots where we can pull up, if you have, it's a reference tool for us tonight. Mo, can you give everyone a little background on yourself?
Okay.
Just, yeah.
I'm Mo. I'm a trader and a guitarist and a daddy and a husband, proudly. I got into investing kind of long term through college, and then just through work. Most of my career before trading was in corporate accounting, so like creating balance sheets and income statements is what I did on a daily basis. So then got into trading and haven't turned back. So
Well, I just want everyone to know that, I mean, that from the economic side, we're going through a historic period. I mean,
yep.
I mean, I've been through a few of them, and I first learned how to trade during the Great Recession, during the Big Short. And I thought I had it down. And they said, if you could trade during this period and make money, you can trade through any period. And what I didn't have was discipline. I had the instincts, I had the aggressiveness, I had the research ability, but I didn't have, I guess, the discipline to tuck things away, because there's a time we're going through a period where the volatility is there, and there's fear involved in it. So all of us have invested before. You may not realize it. We've invested time in something that we wanted to get a return in, ROI, return on investment. That's the key that we're going to look at. And that's the key that if you put any money into this market, you don't just hop it in and just say 2 days later, oh, it's down. I saw an article that said, you know what, you need to sell because blah, 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 XYZ is not going to work how you want it. And then it'll cause a panic in a new investor. And oftentimes we run to what's comfortable. And right now the comfort level is going to our Facebook group and saying, hey guys, I got in this stock. What do I do? And the 95% of the group, we're not investment advisors. So you're going to have to come up with, Maurice, always, what do you always talk about? The compelling why that you hop in for behind your reasoning for making a move.
Your ruling reason.
That's the key. I'm kind of getting on a preaching, not a preaching standpoint, but just right now, because I really think it's important, because my son is an investor and he's been around me for a lot of times, but I know a lot of the young individuals, we talk about this generational wealth. It could be a cliche statement, but we're planting seeds. Yeah. And the issue is the trial and error period could be tough for some families. Well, what are your thoughts on that for the generational wealth? Not cliche statement, but I think it is in some respects.
Well, I mean, I think you hit the nail right on the head. I mean, one, we have to, be the ones to blaze the path for, our future generations. And in order to do that, we have to do that. In order to do that well, we have to have the right knowledge and the right tools, and the right, perspective and aspect, in order to give them that. And I don't think you're, doing preaching. I mean, I'm celebrating this weekend because I spent pretty much all the last week, day and night, working on the mastermind report for, the DCG network and for the DCG mastermind group. And
congratulations, man.
I appreciate it.
We're gonna share it. We have to share that. Definitely let
I'll share a couple nuggets. But
well, I mean, what I'm saying is share how they can obtain that.
Oh yeah. Most definitely.
We'll definitely talk about that.
Most definitely. But we got, we go through a lot every month to make sure that we're prepared for the month that's coming. And I think, at least my crew, I got a couple people on here. I think we're ready for the month. Shout out to Renata on the call.
Hey, Colin, we'll touch on that. Mo will touch on that with you a little bit later. And but as far as the next step, I have some topics I want to touch, man. Okay, first off, last week we had the Dow. Dow closed down 622. That's, it's at that 723 level. This is a Dow Jones. This is a daily chart. It's kind of, guys, I'm a moving average guy. These are here's a couple of vocabulary words you can write down. And if you have think or swim, if you want to add a moving average to your particular chart, I go to studies. I click on edit studies. When I go there, this is what's currently on my screen right now. But if you want to go just a simple moving average, type in simple. It'll populate that. It'll populate moving average. You can put add selected. It'll pop over into your screen. And once you get over there, there's a little wheel and you can kind of navigate that. Now, the idea is you want to know how long that period is that you want to have that moving average to represent, because moving averages are lagging indicators. So price paces price basically creates a trend of the moving average. So a lot of times you'll have the 50-day or 50 period moving average. You have the 200 period moving average. And one of the ones I've been kind of using and testing is a 21 day or 21 period, but I put it on my daily chart. So I'm giving you guys that the tip right there, just kind of let you know what my screen looks like. So the purple is my 21 period moving average, but since we're on the daily chart, it's the 21 day moving average. The blue, what is the blue, man? That's my 50, which the 200 and the 50 are key moving averages on a lot of charts for institutional traders, retail traders, a lot of investors as well. Investors look at that 200-day. Maurice, is a 200-day a staple on any of your charts?
Yep.
It has historic relevance, and a lot of times when things are okay, when you know a group is gonna use a particular moving average or a particular measuring tool or indicator as its benchmark, you can count on price to react to that particular moving average. And if it doesn't, there's certain things that you can make an adjustment with. So the 200 and the 50 are staples on a lot of charts. So you guys can write that down.
We use the alligator, and the 50 is the staple, is one of the staples on the alligator.
I love the 50, man, and I love whenever you want to share your screen. I know and talk about the alligator, because that alligator chart, man, that's almost like for technical analysis. It's a visual that Maurice and his group uses, and it works. I mean, it's easy to visualize things when you see it, like, oh, it's right there. Oh, that, price is below this particular level. So let's move. I'm gonna move forward, and I want to talk about something, Maurice. There's 11 sectors in the S&P 500. The one I want to talk about, though, the regional banks. I'm going to let you go into the kind of dig a little bit further into the banking area, but everyone write this particular ETF down, it's KRE, and Maurice will talk about another one, but I've been tracking the KRE. It's a regional banking ETF for probably over a month and a half since, and this little area right here, this is a weekly chart, but if you see the red lines right here, just the candlestick patterns, and that's something else you guys can research. This area is when I call it the Rona waterfall. The date of that week is February 17th, and then you go February 24th, and you started to notice there was a big change and a lot of stuff going on around the world, and it was just beginning. We had just a sell-off on the regional banks, and I've been watching these levels. I was watching for the 30 handle. If it ever broke that 30 and stuck there, and it did, my prediction was the big time rollover. But guys, we're coming up to a period right now where everyone had a forbearance, and not only residential investors, but you have large businesses, mid-sized businesses, and a lot of the oil industry down in Texas, Wyoming, wherever they're drilling for oil, the smaller guys, they can't pay their lease. They can't pay that mortgage because this kind of ties into the commodity side of things with the oil market, where it just plummeted. So if I'm an oil driller, I'm leasing equipment, I'm paying my workers, but I can't have guys on the rigs all the time. So that's one of the areas where the banks were bailed out, but not all of the banks. And some of the regional banks, you also have your mortgage servicers who are the middlemen who aren't going to be bailed out, like, Mr. Cooper. Let's see, is that Fulton? Fulton Financial. Everybody has the same trend, but as we move a little bit further, and if you know anything about candlesticks, you see a long wick on top, you see that the bulls try to push that up, and big time selling pressure, or the bears kind of, close things out. So, Maurice, can you move forward, man, with your thoughts on the banking sector?
Okay, well,
or whatever, whichever route you want to go with. Because I was
No, I
just
mean, I could follow you. I mean, because you know, I highlighted it in the report. You know, and I do all my trading off the report every month. But you know, as far as for banking, the first caveat I could say is I don't normally trade banks. I don't know. I mean, it's just a sector I don't focus on. I don't really deal with banks. But what I can say is that my research has shown. Um, as far as for sectors, one thing that I follow is sector seasonality and fund flow using sectors and industries. And
hey, pause one
may,
second. Let me just let me type fund flow in the chat bar, guys. That's a key word. Okay, continue, man. I just want to.
okay, yeah, fund flow, and I use industries uh, to do it. Let me see. I might have to take something down. I can show it though.
You want to
But
share?
let me pull it up.
This,
What I can say about banking is that seasonally, May marks a time to short banks. In the report, I highlight every month a sector seasonality section where I go through the different sectors based on historical returns um, when they are, have the highest probability of returns and for this period from May to midsummer, um, banking is usually seeing some red. So sector seasonality is shown to short the banking sector. Now, will I personally short the banking sector? Probably not. I probably won't take any put options or anything in the banking. But if I'm looking at your, KBE um, or KRE, or if I decide, or XLF, that's another financial ETF. Um, Puts on those is what my initial bias would be going for this month at all. So, and even looking at your chart, um, even looking at your chart,
yeah.
it's a nice downtrend. So the adage selling the rallies. I mean, it looks even on the chart, just looking at it, it looks like that should be in effect is to sell the rallies. So just looking at the chart and not knowing anything about the historical data and the economics, say short, and then looking at the historical fundamentals and the economics without looking at the chart, say short banks. So both of those
And
are kind of tying in. So I that would be my bias, I guess, for the month of May, or just until I see otherwise, basically.
well, I tell you this, and everyone, one of the things that we, like I said, we're traders. Okay, everyone is an investor. Everyone in here has probably had exposure to a 401k. If you're a teacher or an instructor, thank you for your sacrifice. Oh my goodness. I think what do they use? 503. What are teachers? They have an opportunity to.
503B.
I believe so. So you think you haven't been an investor, but a lot of times, even if you just set your account to basic, just a balanced 401k allocation, you're investing. Right now
Yep.
might have seen a lot of a drawback, but I utilize the ETF right here for this particular sector. It's just kind of like a barometer. So yeah, I shorted KRE several weeks ago, and I had a nice return, but also that was around the time right before the Fed put the bazooka out there, that first infusion, and it KRE was right. I got a nice kill down this way, found that support level because this became a demand zone. That's something where you guys can write down demand zone, everybody. That's just something to supply and demand are key terms that I'd like for you to kind of keep an eye on. And anytime I bring up a topic, I want you to go ahead and write it down and just make it homework. Make it homework and teach it to your children and add to it. If I'm just touching on the surface, if Mo's just touching on the surface, get it, go to Investopedia, go to Yahoo Finance, wherever, go to YouTube and dig even deeper. But it found a demand zone. That's basically where price became attractive to institutional investors, retail investors, but it just wasn't strong enough. Even though the Fed's bazooka was a beast and it came back in, they followed up. The Fed is also in discussions right now with additional stimulus, as well as Warren Buffett liquidated his position in all the airlines. I mean Delta, American, United. Who else did he liquidate, man? It was Delta, United, American, South, and Southwest. Those are all key players, with Delta and Southwest having the primary lead in the sector. American has been downgraded. I think an analyst said they lowered American's price target to $1, which I take that with a grain of salt, depending on who's the analyst. And United is trying to recover. So Buffett hopped out of that. Everyone's looking to short the airlines. Now, okay, ETF that you want to look at is jets. That kind of mimics the airlines.
Keisha Jet posted it like a fraction of a second before you said.
She dropped jets in there?
Just a fraction of a second. She beat you to it, bro.
Let me see. Let me see where she is, man. Let me see that. What's up, Keisha? Okay, yeah. Thank you. Yeah, all right, fine.
Okay, yeah, I hope I pronounced it right. Keisha.
Yeah. Well,
I'm big on pronunciation. So.
Now, guys, this is one thing I wrote it down, and I've said it a few times. Okay, as a trader, and it's just an investor period, you do not want to get ahead of price. It feels like, and it smells like a short opportunity. Okay, we're looking at the weekly. Bam, this is jets. Now, this is the overall industry, the overall sector. And also you have UXAL, and there's IYT is a similar, it'll have probably a similar pattern. Let me go in. That's the transportation. But similar pattern. You almost have a parabolic wedge pattern forming for setting up for a sell-off, but do not get ahead of price. When I say that, let me find jets again. When I say getting ahead of price, there's such a randomness to this market and the unknown in the market. We have one unknown, which is Corona, which has caused contagion to the downside. And the other unknown is the Fed and how quickly the stimulus can come into play. And if we look, the Fed is currently assessing whether they're going to step in and make a move on boosting the airline sector. So yeah, it looks like we should short it. And everybody's thinking, yeah, Buffett pulled out, so it's going to tank the airlines, but there's no guarantee that the airlines will tank off of this news. Now, let's say you go in and buy puts or you short, and one of these sectors or one of these companies or someone steps in with dovish news, which basically is good news. Let's say Carl Icahn says he wants to take a position in Delta. I mean, I'm talking about a monumental position because, hey, he sees a change, and we see the new winds saying that, hey, that we found a vaccine. Guild has come through. Remdesivir has fast-tracked it, blah, blah, blah. You never know when the jump will happen. So guys, try not to jump into I'm just going jets, for example, because don't jump in and short right away. You have to look for a reason. Basically, price levels are going to be key. We have support around 1335. We have even more support a little bit lower, 1285. Now, if the bottom is coming right in here, if we start getting below the $12 handle, start getting into that 1150, 1120, falling below that, panic will ensue, and that will mean that that's a legit bottoming out this coming to where it just you'll see a big time red candle. So don't immediately short upon the open, guys, because you might see that open and it might just immediately come out the gate and you'll see a red candle and you might get that sell off and then you might get the recovery and the bounce and the run. So just let it establish itself. What are your thoughts, Mo, or kind of what I'm walking through?
I don't, as a rule, normally don't trade the open, just at all in general. Um, I let the price, settle out, and I've read in a few places and been told by a few other um, very successful traders that the big guys trade, before the close, after all of the mayhem of the trading day, after
Right.
everything settled down and before the thing ends for the day, that's when the big guys put in their orders, and so I try to emulate that. Um, and I try to wait till after 2 p.m. to do my trades.
You guys hear
As
that? Well, okay. And let's go with we'll go with Charlotte. Jets 52-week low is 1125. That seems like a good buy target. Do you agree? If I can't just the thing is the way 52-week lows have been made and remade and reestablished during this period, you would think it's a good buy target. But when I look for a buy target, I look for a base to be formed, some type of a formation to where let me get this right. Let's share the screen the right way.
hold them puts for tomorrow. Yep.
Well, it's good. Now, when you hold them, be prepared to set your stops, guys. And I'm big on protective stops right now, because you're in profit 1 second, and a quick move, a quick tweet. Okay, let's go back several months. You remember every time we look up, they would say, "Oh, the China trade deal is not looking good." Sell off. China trade deal is looking good. Market pop. China trade deal. I talked to President Xi, and he's a good man, but we're going to put more tariffs on him. Sell off. And then after a while, the market digested that just basically it was white noise, and we look for signal within the white noise. So let's go long term. Everybody, new job, you're trying to figure out where you're going to invest. You got the 401k. You don't have to sit out, but it's going to be tough. You have to think through, okay, what sectors are strong sectors that usually pace a recovery after contagion or after a black swan. And Mo, I know that you're the resident economist, man. What are the recovery sectors that historically that you've studied, that you've seen, to give, not to say, hey, you go out and put your money in this, but this is something to research for new investors, and something that I would like to have my son and daughter to think about once they fill out that 401k paper, because it's coming for everybody. So, and you can't just say, put it in cash. Well, you can go into the bond funds. I moved everything over there, but can you kind of expound on that, Mo?
Okay.
I jumped you, man. I'm catching
Yeah,
you.
no. It's not that you caught me off guard. It's just you touched on a couple of different topics. So I'm gonna try to address something. Now, as far as looking for a company or what to invest in, what to put in your 401k, right now, or
Let's say I got
even
hired at Rick's Cabaret, and they have a 401k 401k program, and I want to, Rick said, hey man, we're going to do the virtual program. And
okay, I'm glad you said that because something just came to mind. So I'm gonna step back just a little bit. Okay, so if you just got a job, or if you're at someplace and you're investing in your 401k and you think you want to make changes, first of all, research the company, the investment bank, or the investment advisor that is managing the 401k for your company. Because 9.9 times out of 10, your company is not managing um, that 401k. It's an investment advisor that's hired out to do it. So you want to research that investment advisor, research their investment philosophy, what they think about the market, what they think about stocks, what they think about um, you know just the economy, economics in the world in general, because that's going to bias what they invest in and what they um, create for their indexes. And it's those indexes that are highly likely in your 401k. After you do that, I would look at the indexes that are in your 401k or the companies that are in your 401k and just research them in general. Just first stop and research them, research the index, see what companies it holds, see how many companies it holds. See if you got three indexes in there and they each hold 250 companies, make sure you don't have three indexes that hold 150 of the same companies, because you triple dipping. Like it's little stuff like that is I'm kind of shitting on advisors, but that's what a good investment advisor should be able to tell you and show you about your investments, is what is actually in your 401k, what funds are you invested in, why you are invested in those funds at this time. I've said in plenty of previous calls, like if
Yeah.
you had a good investment advisor, your portfolio should have been prepared for this downturn, because it's been painted all over the market for a long time, depending on what type of funds you have. I was reading the investment letter from Ariel Investments. I love Ariel Investments. I love John Rogers Jr. and RuPaul Bonsali and their approach on the market. And their funds have taken a tremendous hit, but they're
Hey,
extremely
spell
long
Ariel
term.
for me.
Ariel. Ariel
Isn't that a
Investments.
brother that runs that?
Yes, it is. It's the largest black owned mutual fund, and one, and not just black owned. I don't even like to put that first. It is one of the best run
Thank
mutual
you, brother.
funds in the country. Period. Hands down. Period. And you that ain't my saying. You can go fact check that up.
So
But
that is not mine. That is Nietzsche's. But
they
go.
they I was reading their investment letters from March and April, and they're in fact they've taken a hit. But if you understand their approach and what their investments are like, they have done very well, compared to other mutual funds over the past. And that's RuPaul Bonsai. Like that lady knows her stuff, man.
That's
Like
the links in the chart right
yeah,
now, guys.
man, that lady know her stuff. So but I that's what I would say is, if you got a 401k, like um looking into buying a stock right now, like that. And I put this in my, I advise, in my report, now it's not a buy time. Like, even to the young lady that asked what would be a buy area, my first question is, why would you even want to buy that right now? Like, unless you're
Hey,
trading it. If you're trading it, even if you're trading it, why would you want to buy it? Like, the trend is obviously a downtrend. Like, don't fight the trend. It's no time to be buying anything, in my opinion. If you already
well,
own something, now is the time maybe to be accumulating more if it's a good holding, um, and dollar cost average. But as far as finding something new, coming into something new, I'm not gonna use advice. I don't
hey,
recommend. You know,
are you guys? Is everyone familiar with dollar cost averaging, DCA? And put it in the chat bar if you are. If you aren't, because we can go right to it. Okay, good. It's right in. It's right in Investopedia, and it's key, like Mo said, because right now, and I'm gonna put the link definition, because basically it's let's say you get paid every week, every 2 weeks. You want to earmark a certain amount of funds that won't, the richest man in Babylon. 70% of your wages for living expenses, 30%. You're going to put, 10% is going to go into an an interest-bearing account, and that's the idea of dollar cost averaging. A set amount goes into an investment and that investment's price will fluctuate, but you use the same amount to acquire. So when the price goes down, you accumulate more shares. When the price goes up, you accumulate less, but you're still in that habit, in that routine. But right now, you can continue to do that, but what you expect is volatility. So price volatility is gonna, and you can't let it, you have to have your time horizon where you say this is gonna be a 5-year, 3, 5, 10-year plan, 15, 20-year plan. If you're super young, 30, 40, year plan. So these big waves right now will be just tiny blips in 10 years. But let me just go into this right now, man. I pulled up Southwest. Okay, Charlotte asked if KRE was a buy. Guys, I'm not getting ahead of price, but Southwest is a short right now. If it falls, okay, the initial alert, this isn't a buy, sell, or hold recommendation, but it's on my watch list just off of what we're doing right now. It's going to trigger for me to watch it even further if it falls below 28.25. And let's say it falls below that. I went into the weekly and I pulled back, and we go back over here to, what's the date? May of 2014. That's the last time we had a nice consolidation in that area, where price found these levels. 2014, now we're looking at 6 years ago. That's support in this range right here. This is a demand zone for Southwest. So that 2750 handle, if it breaks that, if it breaches 2750, I'm setting my alert, creating an alert at or below 2750. And the airlines are one of the sectors that I frequent. I'm all over Boeing. I usually don't trade. I wasn't trading Southwest, but they have an aging fleet. I'm a technical trader, but I'm a hybrid trader, because news catalysts drive price action over the short term. And that's what we look for trader. We look for volatility. And also, if I'm looking for a long-term buy, I need to know the story also. So I'm setting this for 2750. If price falls below 2750, I will look to enter short. Now it might do that in the morning. And I'm kind of going off into just a teaching side, guys. So if it falls below 2750 at like 9 a.m., don't just immediately buy puts, because the idea is support and resistance. So right now, price is at 29.23. It closed at 29.23 this past Friday. So let's just say I'm gonna put it on the daily chart, guys. And Mo, I'm sorry for going off onto the what is it called, man? The ADHD tangent, man. But this is just sitting on me. Okay, 29.23. Let's say price falls below that, the 28.25 handle, which is support right now. So you have support at 28.25, and there's a little resistance level up at 31.39. So that's the floor, that's the ceiling. If price breaks through here, if it falls through that 2750 handle that I was talking about, and let's say it goes down into this range, it's not just a linear parabolic move all just straight down, even though Rona has done that to quite a few. But you're going to what was once support, it becomes resistance. So what was once your floor, it becomes the ceiling. And a lot of times price will retest that previous level. It might poke its head up a little bit, and then it usually will fall back down, or if it can recover. But a lot of times you need to let it break through and test that level again, and then you look for confirmation. Now, if you're a quick trader, if you're a scalper, or if you're a very quick active trader, you can hop in. you can hop in and hop out. You know, there's certain people that can do it if you have, but you have to be careful of the pattern day trading rule. But that's just something I just wanted to show you guys, because this chart for Southwest is up and it's setting up for me right now for, it's setting up for a short play. But we just have to let the market kind of establish itself. I'll watch the 5-minute chart as we open tomorrow. And let's just say that was the open. That's the first candle right here. And if you're a new trader, you would see this green candle run up, and you're thinking like a lot of young traders, new traders see that green candle, they'll go long. They will go long. And if you forget, guys, here's another thing you want to put on your list is the RSI. That's the relative strength index. And that kind of gives you the idea of like buying and selling pressure. A lot of times guys will go long, but if you really have your chart set and your moving averages, you know you ran into resistance and it was set up for a sell-off, and you know that kind of thing. So you need to just kind of continue to study, but I just wanted to just move into that little segment right there with the airlines, and I think Southwest is on my short watch list for Monday. So we'll keep adding to this as we go. At Mo, if you had anything else to add, I just want to ask you something about we got the banking sector, had the airlines, and the sector that I went short last week that people were looking to go long in kind of early was the cruise industry. And I shorted Norwegian, and it was a good play. I've sent it out on the email list. That was the call that, you know, if it falls below, once it falls below 14, it's one to watch. And it fell below 14, and it's kind of in a trading range right now, but it's hit resistance. The bears have kept it below 14. It might poke its head up, but there's a chance if it falls below that, it gets below, what's that right there? The low is 1091. That's the weekly. That 1091 handle is something to where if it falls below that, there's going to be some room to make a run to the border to the downside. Like this was last week. Each candle on this screen, guys, represents a daily candle, each one day. So you remember last week when they kind of did a nice little stimulus, and they said, and there was no rhyme or reason for the cruise industry or this sector to have a bullish run, but it did. Royal Caribbean had the same look as well, which is a little bit more volatile. They all had that little pop, a bullish pop, for no rhyme or reason. That was a setup. A lot of times guys can take profit or try to buy things up, and it ran out of steam, rolled over, and we're seeing the same trend on all three of these key players in the cruise industry, cruise sector. So if you can do your support and resistance, and if you're looking at a possible short, if you're open to that, and when I say short, I'm saying puts and calls. This is a sector to kind of watch, but now be careful if you try to go long just because this price has just rolled out of bed or peed the bed, you know, had the Rona. You remember last week I talked about casinos, but what are your thoughts on the cruise sector and what you're seeing in the charts, Mo?
Well, as far as for your trade, it looks, I mean, pretty good trade. I mean, it's definitely setting up for a short setup. Once again, like, you know, I kind of feel we're always saying this, but I'm not, you know, necessarily following cruise lines specifically, or not Norwegian anyway. I just, you know, keep up with the main kind of like economic storyline, and I know
That's why you're the
they're not
economist, right?
they're not able to they weren't able to get the funding from, you know, all of the Fed bailouts, so they still kind of, you know, hanging in the wind as far as the help. And they are based on people, one, being able to move about, which hasn't happened, and two, those people having disposable income in order to go on cruises and move about, which in my opinion is probably going to take a little bit longer to get back to than what people think. So just kind of in general, like I'm I'm still favoring the downside of Norwegian and other um, cruise lines. This one here, I'd be interested to see if it breaks through that bottom price line, or if 698, or if it will bounce off there and just kind of remain in that trading range that you have marked out there. That is kind of as far as what this stock, that's what stands out. If it breaks through that bottom, then I mean, you probably have to go back a couple of years, but it'll probably hit the next support resistance level down.
Let's go to 20. I got the 20-year chart. I got a 20-year chart on it right now.
You probably got to go back a little bit then to see when the next
Goodness.
low was.
Yeah,
it's been some time.
Let's
so
see.
If it breaks so that's a major support area right there. So
let's put the weekly on.
If it breaks that 698, that $7 to the downside, and it starts to consolidate at the next lower price level, that's saying something about the cruise industry and what investors think about it. So that's as far as how I think about it, I approach it.
Well, okay. Got the 20-year. It hadn't been this low, and in a long. It has. It really. Mm-hmm. This is probably we're getting the all-time low areas. Mm-hmm. And I think I had a question. We had a couple of questions in the chat. From Nadia, do you mind sharing what is the name of the study to add those price levels, the gray dotted line? And are you talking about right here? Basically, and click yes or no if you can. Okay, that's my drawing set where I use the drawing tools. Let's say you can create a drawing set. When I go up, there's just an active toolbar that I utilize where you can go up here for the drawings, and it can show drawing tools, and I'll go right down. This is basically the price level, and I hit that, and I draw out support and resistance using price levels sometimes just to allow me to kind of eyeball a few things to know, just like, okay, once price gets right in this area, this was kind of a flat top right there, and I just I'll tap it, and it's just a reminder. I'll double click it, and it's 37.34, and then I can remove it or whatever. But I establish those because it just lets me kind of, okay, yeah, I see a little bit of, it's not an exact science right in there, but there's a range that you can place it in. And there's also, we can set, I can do my channel basically where I, set a trend line and establish whether it's going to, this is kind of sharp, but this isn't the right one. This isn't a good example with this isn't enough steep enough angle, but I'll get you another one. But down here on the drawing set on the toolbar, if you can see it on your screen, Charlotte, not Charlotte, but Nadia, that's what I use right there. Hey Mo, Charlotte has a question. Any thoughts on Digsnoff, the Dow?
No, Dogs of the Dow.
Oh
yeah. Oh. Okay, so I can answer some on Dogs of the Dow. What first? Be knowledgeable, be cognizant of the fact that that strategy, one, it is a long-term strategy, so it's a long-term strategy. But two, know that it is an income strategy, not a capital appreciation strategy. What I mean by that is Dogs of the Dow is not a strategy to where, okay, so first, the Dogs of the Dow is a strategy where you're supposed to buy the bottom 5 or 10 performing Dow companies, which are If you look at the Dow Jones industrial average, it's the top 30 companies in the U.S. And it's okay. So it says the 10. Okay, some do 5, some do 10, some do 15, but it's the bottom ones that you usually pick. And some people think that because you're picking um,
Best,
the
worst.
bottom of the pick, you're
Yeah.
picking the worst performing ones in order for the stock price to get higher, and that's not the case. The dogs of the Dow, as you can see, is they use the words high yield investments and blue chip strategies. It's an income strategy designed to pick the ones with the bottom 5 or 10 with the highest dividend yield. And the strategy is because they're in the Dow Jones. They're large, not large companies that the U.S. pretty much, is pretty much they're not going to go anywhere. They're stalwarts. They're big, large companies, and they have large dividends. Now, that's another thing. Um, you know, as far as how to invest into a dividend income company is similar to investing into a bond. The company needs to be able to service that dividend. So if it has a high dividend or an above average dividend, there's a reason for it. And it's in the dogs of the Dow, meaning that it's one of the lower performing companies. So, um, you know, the prudent investor and using that strategy would be wise to one, know that you're doing it for income. So the price fluctuations is not your first priority. Your first priority is them being able to pay that dividend. They not decreasing the dividend, and they are making enough money no matter what's going on in the economy to at least keep that dividend going. If they can do that, then that's the company that you want to look at for any income or any dividend, stock if you're looking for an income stock or a dividend stock. Not capital appreciation where you buying like a value, you buying it real low and you expecting the stock price to reach, or to go up 30 or 40%. Like that's capital appreciation. Dogs of the Dow is not like that. It's an income strategy. So, research those bottom ones that have high dividends. Try to figure out, high dividend yields, which is really the return on your investment for a dividend or investing in that company for the dividend. And figure out why that dividend yield is high because in economics and financial economics, higher interest rate is synonymous with higher risk. That's the only way you get more for your investment is to incur higher risk. That's why, a lot of traders make money and they put that money on the line day trading because the higher risk, but it's much higher reward than sitting on something waiting for 4 or 5 years. But then also Warren Buffett, he takes a certain risk on companies that are very, very low, are not doing, well in the market's eyes, but he can see something other people don't. And he's taking a risk on a company that's being beat up and may not recover in the stock market and buying all of their stock and taking a risk for the high reward that the market is not seeing what he's seeing, and that stock is going to come back here. So it's all about risk reward. But dogs of the Dow, just that's what you need to know. It's an income strategy, not capital appreciation.
Great breakdown right there, man. And everyone, I put links to just the different some of those topics, some of those some of the terms and things that we're talking about for that Mo was discussing in the chat bar, so you can go there and save it. And I want what I have on the left side, guys, is a watch list, and it's started last week, last Friday, not this past Friday, 2 Fridays ago, a week showing weekly strength. I know we were looking for some positive ideas. And now this is a daily chart. This is AMD. I'm a long-term holder of AMD stock. My daughter, my son, that was one of our family projects, and pretty much in at $4, which was a great thing. But we talk about support and resistance. We talk about patterns, certain chart patterns. We have a classic double top up here, and we've reached this range right up here right now is resistance. The 57.76, give or take range, but really right in that 57.50, 57.70, even up to 60. You know, you look at support and resistance. You don't look at it like a barricade, a concrete barricade. You look at it like maybe a chain link fence that can lean in a little bit, because price will test it and poke its head up a little bit to see if there's a bite. You know, you have to have sellers at certain levels. You have to have buyers at certain levels. It needs to be an agreement. And when it comes up, and historically price has a history, it gets to a certain level, you had a big time sell off. AMD pushed up to probably its all-time high of 59.27, and it couldn't breach it. The bears came in and just, guys took profit, they sold off and ran it down, and AMD's in a strong situation. We have basically we have support down in this area of the 38.92, and now I'm going long-term support back, of 2019, November 2019. It found a really good base in here, and that's a positive thing, where it was consolidation, and then you had a bull flag, and then just a steady run up, and it's dealt with Rona really right in here. Everybody dealt with Rona, but look, it found support, found some strength, and then it found that went back to that support level that it had established in November of 2019, and it hung around those price levels and kind of made a new base, gapped up, filled the gap, and made a run. I think we had that stimulus, the bazooka came in, had some earnings, blah, 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 and it ran up into that resistance level again, which now we have established that this price level, it has a memory. The next time it comes up, that's the line in the sand. Like, okay, when it gets up to that 57.50 range, if it can break and hold and stay, which you never know, we're in a volatile range. So if you buy something, if you go long, because I love AMD, if you buy AMD outright, expect, hey, it's running up. You know what? Oh my goodness, it's back to 38. You can't predict where price is going to go. Now, over a long-term window or a long-term time period, when I say long-term, I'm 3, 5, 7, 10, 15 years. Okay, we back it out and we look at the historical perspective of a bullish trend. But let's go a little bit longer. You go over the weekly, 15-year weekly. We had a big run up over the 38, the sell off. This is the early stages of its career. A nice bait. This is a basin, guys. If I can, let me pull something down. I right-clicked on the yellow, my yellow bar to pull up my studies. I pull up the edit study. I'm going to edit the 30-minute, which is not on there. I'm going to edit the 21-day or the 21 period. I'm going to remove the study right now where it won't show, and I'll do the 50. All right, it's going to be a clean chart. Guys, we talked about, Charlotte asked about Southwest being a buy once it gets to this level. Well, when I say this level, let's say we'll go back and use this example right here. That sell-off right in here, this period right here. That's the date. That's July 10th of 06. Let's just say we had that big time rundown, sell-off, and that, let's go back to 06. That might be, could be close to 52 weeks. Let's just play like it is. Okay. Yeah, it could be a buy, but the thing is, there's nothing that has established that say, hey, we found a base. We're forming a base or support. It's just the fact of, hey, you know what? It can't go any lower. It's already at its 52-week low. It's broken through that support level, and now there's a little bit of support back over here. I'm going in long. You get in, and yeah, you repaid over this period of, like, let's say, what's the date? July through September. and it reaches look to the left. You always look to the left when you're charting. And we're coming up to, that was really a support level right there. And that can be somewhat of a resistance in this area. Hit that, sold off. And then it just a steady decline. You know, we just, it broke through that support level and a steady decline from, when did we have the breakthrough of that? The weekly of January of 07, and just kept running through 09. Now we're down, $5. This is when we got in. Now we back out a little bit. That's a prolonged nadir. Just the bottom, that's a prolonged base formation. A lot of accumulation. Nobody's trying to run price up. People are trying to decide, like, is this, now it's not going any lower. It's fine. It's found a base, but the look of a chart when it really finds that base formation, you can almost draw like a bowl when you see them. Now, when you're in the moment, you're thinking like, man, what's going on? But you need to let it establish itself to where it finds like a level to where it just doesn't just keep going down. It's not going to be that trend. It's going to be, okay, it might pop up a little bit, not long, big, long candles, and it just kind of just stabilizes in price where it's almost becomes boring. Then you see like a little bit of a run up, a little hesitation, another run up, and price will kind of consolidate a little bit. You'll see accumulation. Then you'll see that move where the markup, where guys, and then you'll have a rational exuberance where everybody starts, almost like how Bitcoin did. I can't remember the year when everyone was even the usher board. What year was it? 17?
2017.
With everyone on the usher board, pastor would stop sermons and say, you know what? Let me check my crypto. Put your thumb in Ecclesiastes, and we're gonna go Proverbs 27:17 because the sparks in this crypto, getting me hype, and everybody was buying it. Irrational exuberance, and then you run out of steam. And we look down here at the RSI, the Relative Strength Index. And when it's over 70, this is a note that this is I utilize this formula. When it's over 70, it's overbought. When it's below 30, it's oversold. So now these aren't just guarantees. Like when something's overbought doesn't mean it's just going to sell off, but it's, it's reaching almost an exhaust point, an exhaustion period. So over 70, it can remain in overbought status or oversold status for lengthy periods, like a Beyond Meat, things that are just that are momentum stocks. But irrational exuberance runs out of steam a lot. But this, when it ran out of steam and it found support and it continued, that's where, before you buy the airlines, we want to see a support level built, maybe a couple of tests, maybe a sell, and to where it's not just a steady, oh, you know what, it's right here. It could, because the airlines could continue to bleed, or they might get a boost from the Fed and pop up, but still you have the X factor of Corona, and when will we begin to fly? And you still have airlines that are going to fail and file bankruptcy. Ryanair is struggling, so it's not done. So be careful in the airline sector. I think it's a tradable sector, but I also think it's a very volatile sector. Now, and let me give up to Mike, man. I kind of went on too deep of a tangent.
No, it's all good. I'm gonna share some. I can share some things.
Okay, you want the screen?
Yeah.
All right.
I could just share a couple things on airline. I guess just how I think about airlines, just fundamentally what is going to get them running again, back, attempting to participate in commerce, because
I'm handing it to you, man.
I appreciate it, because that's what's going to generate revenues and what's going to generate profits and what's
Juanita,
going to
can we get a plate
returns.
too, please? Okay, go ahead, man.
So that's how I think. It's just like what's going to get that stuff going, and you know, for airlines, the biggest thing for me is just just the general economy, just people getting back going again, and then you know being able to spend. So you know, if you're thinking about when is airlines a buy, like first of all, that is relative. Because it depends on you. I mean, are you buying it long term or are you looking to trade it? Because
That's the
if you're
question.
looking at trading it, then that's a completely different conversation of when it's a buy
Well,
versus if you're
let's
looking at a
ask
long term
everybody in here,
investor.
man.
Um,
Let's ask them to put while you're going.
yeah, and
Put
then
in
I could pull up mine and I could see if I can help some of both of y'all.
yeah,
I
I'm
can
a.
show you what
It's all you.
is.
Okay, if you're in here, go to the chat. Let us know. Are you a new investor? Are you a trader? Are you an investor? Are you both? Just so we can kind of get a gauge. Because
Or if you don't know.
yeah, yeah, because I'd recommend if you don't know, we just continue the investing. I mean, not the investing education. That new. Okay, we got newbie, learning both, trader, intermediate, Mo. What's up, Mo Fuller? T, new, both. It, and honestly, we're all both when it
Hmm.
comes down to it, because even I put a post about Warren Buffett. Uh, he sold puts, man. He was selling puts, and he took it on the old man chin,
Yeah, you've been
during this.
active in puts for a long time.
And
People don't
you
know that, but you gotta read through his
go to his
chairman letters.
perfect, yeah, man.
You
Remember the
gotta go
arguments
through his
because
letters.
you're the resident expert on Buffett, man. Hey, you have the screen, man. It's all you.
About
Or
to share.
and okay, Charlene, with Gild, I was gonna do something on the biotech sector. Biotech, man, for me, it, it outpaces. It will outpace technical analysis, and then it, and we don't have the expertise to dig into the fundamental analysis because there's always a news report, whether um, uh, okay, approval, denial, because Roche oversees the company. Roche is doing they're doing the antibodies test, that they're fast tracking that. Guild is on point, they're getting fast tracked, but tomorrow there could be a setback. So I can't recommend it. I just think you just have to, if you're gonna run with it, you put the amount of money in there that you're comfortable with possibly being having taken from you. But it could be you could have a 10 bagger out of it though, So just uh, use kid gloves. Okay, back to you, Mo.
No, it's okay. On Guild, yeah, I know that they had some news that came out just recently, about something they say may be available already, like within the next couple weeks or something like that. So I could see them having some positive price, pressure, some appreciation in the next couple days. But um, you know, that's another one. I don't trade. I haven't looked at the chart, so I can't say too much. But what I can say is based on the news being a catalyst, and based on the previous news catalyst that shot that stock price up, just based on the news. Um, there's a lot of hope in this market. Um, it's a lot of hope on the cure and you know this the coronavirus being handled and taken care of. So any news on any positivity of them getting that under control is probably going to move that stock. So for trading, it's something to keep your eyes on, but it definitely will be volatile. Keep your support and resistance
And those stops, man.
areas and tight stops. That's something that I recommend to my traders this month's tight stops. Um, and if you looking to invest long term in Guild, like or any pharmaceutical company, follow the science because like that's what's gonna matter. Like they say they got this thing available. I'm curious to find out, what steps has it already gone through in the normal um, realm of vaccine or antibody testing, and has it gone through those regular channels they've speeding at the FDA? Then released a lot of the red tape that most pharmaceutical companies have to go through in order to get something like this approved. So like,
That's a house of cards to me,
that's
though. That
right.
when,
That's what I'm saying. So it's like if it's an investment, if you're thinking about investing in them or putting some money in there and sitting it and letting it sit till next year, um, you know, follow the science. That would just be my
now the
recommendation. I
biotech
will follow the
sector,
science.
that is one of my ones for like a 10-year window of like, hey, AI and biotech. Let me just sink some. There's a space in my portfolio for that speculative roll the dice possibility. It might go to
Biotech is also one of the companies. I'm sorry, companies. One of the industries that has that's currently on seasonal sector seasonal sector seasonality. Oh, I'll say that a few times twice. But it's in a long period right now.
hey y'all, this
So
brother right here, man. Look, he doesn't talk like a great deal, man. I'm a talking dude. I'm an only child, brother with freckles. So I kind of had to make my, shoot. I'm trying to make my doggone way. Maurice, man, is the. I use the force. Maurice gives you quantifiable data to to break down. He's like, what you
just
doing, man?
man,
I,
I'm just a
no, dog.
nerd, man. That's
No,
all.
dog. Yeah,
I'm
okay.
a, I'm a techno fundamentalist at
But
heart
I'm
because
saying he's a.
I rely on the charts just as much as I rely on the
But
fundamentals,
no,
but
what I'm
because they
saying, man,
all
is like,
tell a story, and
th-
so
look at
I
your
like to know the
numbers.
story.
I'm not saying you looking at the what who they hired as the
Me
CFO.
too.
I'm talking about you give the historical data and you lay it out in the spreadsheet to where if somebody tries you or they need like show me proof. I'll have that too. So this is the
All
person that
right,
we
so
need to lean on.
let me okay, so the first thing I wanted to show is a little back about what I was saying about fund flow. This is something that I've picked up, like not like personally, but just reading through different um hedge fund managers um papers and reports and letters to shareholders and stuff. One thing that I forget which hedge fund manager it was, but one they all talk about following fund flow, and that's what a lot of hedge fund managers, get. Their edge. They're able to see where um, the money is going before retail traders, people like us in the trading groups and all of that. So one of the some book that I was reading was saying one of the good ways to follow fund flow is to keep track of um, as many industries as you can. I believe I have about 40. I think I have 40 industries, around 40
Told y'all.
industries
Told you.
represented by the ETFs here in the U.S. And if you are able to keep a running track of the returns on those industries, you're able to see fund flow kind of in real time. And it was at first it was difficult to do, but this site Koifin, this is like this is my nerd secret weapon, I guess. But it's able to it has so much data and access to so much data and allows me to arrange data in so many good ways. I like to do it. So this is where I keep, my sector ETFs, and I'm able to see fund flow. And what I mean is like, you see fund flow by what like, because you know I mean, you have to think about it. These institutions, whether it's mutual funds managers, whether it's hedge fund managers, whether it's proprietary traders, which are called prop traders, or just those, like their business is to do something with that money. They're not going to just not do something with the money. Like the money goes somewhere. It doesn't evaporate. It doesn't just swindle. Like, if it comes out of one market, it's going into somebody's account or it's going into another market, it's going somewhere.
Sector
So
rotation.
this is all sector rotation in real time. So, when you're able to see, like, one of the reasons that I've been, um, you know, kind of on the defensive is even for the last 6 months to a year, like, uh, some of the best. This is biotech. It's been interesting that video games, and this is a gaming ETF, that sector has been doing well
Hey,
over
what's
the
that
last
gaming
3 months.
ETF?
ESPO. This
Yeah,
holds the Activisions and Take Twos and EAs, and
yeah,
um, I think it has some AMD and Nvidia.
perfect. Nvidia.
Uh,
Okay, right, right.
yeah, like, this is the game. But now, like, thinking about the economics and what's been going on, more people have been at home, so
They're
more
pumping
people
that.
probably have been
Yeah,
buying games and playing games. So, I mean, I can see why over the last 3 months this has been a top performing sector. So, like, this is just kind of how I look at it when I prepare my report. I look at it over the past day. I look at it over the month to date, the quarter to date. I look over the year, and I try to see what the trends are. I try to see what, if it's two or three ETFs that keep popping up and all of these different ones, then something's going on with that one. There's money obviously flowing into that sector because it's been up, for the month. It's been up for 3 months. It's been up for six.
hey,
So, I
walk us
mean,
through that one again. You said if there's a certain ETF that keeps
okay,
popping
so
up.
I could do it like, okay, so let's see. Like, the April month is kind of weird because it's the start of a new quarter. Usually I like to do it by quarter, and I do quarter to date. But as you can see, like, month to date and quarter to date is kind of the same because we just started a new quarter. But like, everything kind of, in the investment, we're in the, corporate, investment banking, accounting, they run on quarters. Everything was released quarterly. So, in months. So I look at months. I look at 3 months or the quarter to date, sometimes the half a year, and then I look at the full year or year to date to see just what the returns are in these different sectors. So this is um, the 1 month returns for each of these sectors. And actually, I'm gonna go to this one so you can actually see a little bit better. Okay, yeah. So I got this one here is the month to date. It's not gonna mean much right now, month to date, because it's month to date and May just started. So it's really just Friday here. But if we look at the 3 month return, quarter to date return, and year return of these ETFs, you can see gold has been doing well, video game, biotech, treasury bonds, internet companies have been relatively well. I mean, they've been down, but not down as much as, say, uh, QDM, materials, consumer discretion, like, so it's been relatively better. If I look at the quarter to date, that is going to be um, April and May. So this one looks at kind of April and May. And we kind of see oil and gas was doing well, but we still see gold is up. So it's money going into gold, Bitcoin. Um,
The halving is coming up. I know you
the
can break
halving
that
is coming
down.
up. We are preparing for the halving for Bitcoin. My DCG crew, we have our bullish swing period set. So, a lot of my team members, we ready to, we know when to expect this dip that's coming and when to get in when it's done.
Right,
So,
right.
but yeah. So I mean, I just kind of go through this, and then I go through year to date. I wanted to show this so you can kind of see the names of these different ETFs that I have in here, and it really just is all as many sectors as I could go through my textbooks and different hedge fund books and different manager, mutual fund books of industries that are in the U.S. I gathered as many as I could find, and I got up to about 40. And so um, this is how I keep up with fund flow. I just do it, I can do it based on the day, on the week, the month, and I usually do 1 month, 3 month, and
Well,
6 months year to date.
okay. Hey, guys, listen. I apologize for that. We're going long like this. We're trying to get it all in for that market prep, uh, and we're getting in depth with it. Mo, the other Mo Fuller wants to know about a silver ETF. I use SLV.
Yep.
There's a little bit of a divergence right now with silver. Gold is going up, and the silver price is, the separation has been, it's the most that it's been in years between gold and silver. Now, one of the things that we did this holiday season, then I saw Robert Kiyosaki talk about it. We bought, I bought physical silver for the family, and they looked at it like at first like, oh yeah, thank you, but as you go forward, I mean, I was on that John Wick thought process of like, I like John Wick when he hits that concrete in the floor and he digs up all those gold coins, and we're moving to a digital society, but physical gold, physical commodities still have a place. Even all the great investors mention it. I'm not going to join a network marketing group so I can get gold. I'm gonna go right to the mint, or I'm gonna go to the gold. Most of the areas in your area, you can find a gold supplier that they have their own mint, or gold, silver, precious metals, and jewels. But anyway, go ahead, man. You're right on it.
No, it's all good. The one silver ETF that I know of is the SLV. It's by State Street. That's the spider. The way you can usually find any ETF, well, first one of the ways is you can check the IBD paper. They have a good ETF section. I don't know. Maybe if you could pull it up. I don't want to overrun my computer
No, I
right now,
pulled up
but
I'll pull it up, but I
um,
also I'll put the
with the
link in there.
IBD section, they go through different a bunch of good, I guess best performing of the ones they follow ETFs. You can go there, or you can look by the companies, that sponsor the ETFs. I usually try to follow State Street. I like the spiders, and I like iShares by BlackRock. The iShares, they pretty much have them. VanEck is another one that has some pretty um, well performing ETFs.
Let's pause just a second. I'm gonna let them write. Okay, newbies, we're getting the nuggets right there. So Mo is giving us the names of the companies that run the ETF. So we have
That's
iShares,
awesome.
let's go.
iShares,
VanEck.
VanEck, VanEck Vectors, um,
I'm writing them in the chat bar, guys. So
SPDR. Those are
the
by
spiders.
State Street. Yeah, all the spiders. And they have more than just those major spider ETFs. They have a bunch of them, so you can go check State Street. Um,
Everybody email me and I'll put something
and
together.
your brokerage likely has some, because I know Fidelity.
Absolutely.
I broker with Fidelity, and they have their own ETFs that are Fidelity ETFs for healthcare, for any, like each of them. So you can check your brokerage as well, if you have a full service brokerage. But to answer about the silver, um, I would check VanEck ETFs and see if they have a gold miners, or a gold I'm sorry, not gold, a silver miners ETF.
Well, okay. Mo gave y'all one of his prized possessions, man. That Coifin breakdown. I remember when I first met him, he doesn't just show that or share that, like, because it takes time to break it down, and we're in here together, and going through it. And I know a lot of individuals ask about, hey, man, you guys, well, in the group, you got to give a free seminar and give everything. Well, it's a lot of free information, and I hate saying free. It's just a lot of info out there, and I pass as much along as I can. Mo's gonna hand it out, but when you pass it along, and you have to take it as is. Like when we learn something, and it's not coming from directly how we want it, because we're all on different schedules. We're all on different times and different points in our lives. So you have to take it as is. And I've seen a couple of people get frustrated and say, well, I'm a newbie and you came with these technical terms. And I said, I want to learn. And then you hit me back with this. And, and it can be frustrating, but there's a way that we have to take it upon ourselves to play catch up. Because I'm never asking somebody, hey man, train me, train. Well, you can approach a mentor in a certain manner. But for me, the way to play catch up is basically, if you don't know the terms that they're using, you get on Investopedia. That's why I kind of kept going with Investopedia, because Mo is at that level where he'll drop certain phrases where we you just keep moving. But Investopedia, we'll go back in, we'll do the replay, and you write. It's going to take some time, but you write the notes down. You write down what a bid, what an ask, what a bid-ask spread is, what dollar cost averaging is. We've talked about that. We talked about index funds, puts, calls, moving averages. So you write those terms down, and then you go to Investopedia, you plug them in, and it's almost like going back to school, and you do your doggone, you do the homework, which I know we all have families and we're trying to, we got to cook dinner, we got to do this, we're staying at home and everybody's screaming, but we got to play catch up at night, whether we're listening to I call it book by phone, but listen to audio, audible. But once you get on Investopedia and you memorize your terms, you go to YouTube and you plug in those terms, and somebody's made a video on it. I put a link to my YouTube channel. I have some videos, that some of the stuff that Mo and I have done, and just some other things. So it's in the chat group. But then, okay, you get that, then a lot of times people head to the favorite Facebook group, and then you search the names of the most popular posters, most active posters. And then you print out their posts, because you can type it in the search bar and it'll pull up all their posts. So you do that, you print it out and make your own little booklet, and you highlight it. Okay, what is he talking about? Oh, dude said such and such. He said, okay, buy this, or hey guys, here's a study thing. A lot of times guys like Mo, myself, Eric White, King Stephan, Yates, a lot of people in that group will post just nuggets. But it's going to be, you got to filter through it. It's just going to be, you got that, then you're going to have a lady that came in earlier today, said, hey, give me $1,000, I'll make you 6,000 in a couple of hours. And that's the hustle. You're not going to beat a system like that. So just go ahead and walk by that person. But then you find the new terms and you rinse and repeat. And it's going back to school. But if we're building generational wealth, this is the work we need to put in, because it's not going to be somebody's going to walk you through and teach you without. So my big thing is we ask better questions once we begin building a stronger base of knowledge. So when you study on your own, or we continue to do our due diligence, as Keisha says, and Tammy Johnson was saying, we're going to school all over again. But when we approach it in this manner, like I said, and then the next question that you ask is going to be a question that's already kind of vetted, and it might trigger a spark in somebody, an expert or a mentor or whatever. You know what? That's a great question. Because the questions in here have been outstanding, and the thoughts. You do that, build a base, and then if it comes down to it, to where you really focus, because you don't have to get a mentor for long-term investing. That information is out there. You can read your books, you can watch your videos, you can save your money. But if you don't have the time to do it all, and you need someone to walk you through a tailored program, a structured program, that's when you employ the services of a mentor or pay for a program to have it. And it should be tailored to your style, your understanding, your level of know-how. And I wrote that down because everybody's bartering for time. And then they should, the knowledge should be delivered to you in a way you can digest it. So I mentioned on here just Maurice has his program. He has a DCG Gladstone. He's going to add some information on that. And then I just email me. I have the email list, guys, and I'll put you on the email list. I'll post articles, ideas, alerts. If something's on my mind about a sector, I'm attacking that sector. Like last week was the cruises and McDonald's. I was going long McDonald's, and short the cruise sector. But I'm not going to just say, hey, buy this stock, sell this stock, because that's a risky proposition. But I'll tell you what I'm looking at. And the last thing before I give it back to Mo, beware of the penny stocks now, because the ones that are tied to the biotech sector, look up the movie Boiler Room. There are some people who make a living flipping penny stocks. I think Marcus Davidson or Marvin and BSI, those guys are hitting it. Crystal Flames does pretty good. When I say penny stocks, it's usually under $5, but I'm talking the ones that are under $1. When it's like 14 cents, and somebody says I sunk $5,000 into it, and it went up to $1, and they sunk some more money into it, and then the sell-off happens. That's where the RSI comes in. The RSI, Relative Strength Index. You can see where, or the MACD, or you can see where the money flow go when the money leaves. That's when that price is going down. And if you're stuck holding that bag, that company might go under at 15 cents. Something JC Penney's at a quarter. I think JC Penney's at 25 cents. And somebody was looking at going long, and they're filing for bankruptcy. So be careful what you're doing. And then closing it out and back to Mo is, guys, the Fed is buying certain things. They're buying U.S. Treasuries. They're buying mortgage-backed securities, commercial paper, municipal debt, corporate debt, including junk bonds, which is crazy, and investment-grade ETFs. So they're trying to prop this market up. But if the Corona doesn't cooperate, because it's the unknown, if we can't get the businesses started back in a safe manner, all that propping, the only thing that might survive is the commercial paper and the debt purchases that they're doing, because mortgage people are going to default on mortgages, man, and commercial mortgages, residential. So just if we can continue to invest and also learn to generate income, like you guys have said in the chat bar during this time, we can sustain ourselves through this downturn. And that's the mic drop right there, man. Back to you, Mo.
All right. I guess I can try to give a couple of nuggets from my network and my DCG group. I posted my link in there. I posted in there also. Um, my network is a yearly subscription, and the report is a monthly subscription. You get the report, you get access to the network for the month. You get the network, you get the report, and
Is it at the beginning, man?
the network for the year. This isn't the this isn't the beginning of the report.
No, I meant your link that you posted.
Oh yeah, it's
Linktree/trader.
Yep. You go there and you can click the link for either the report or for the network and get.
I'm gonna repost it. Just put it. Okay, guys, it's in the chat. It's linktr.ee /trader_Mo, and it's in the chat. So take a look at that. Okay, go ahead, man.
So I want to kind of give one thing about DCG and our approach. We plan the month out, like, so. All my trading, like if you see my post, about last month, we knew what was up, and at the end of April, at the beginning of April, because that's what we prepare for. So we have our bias. We have certain days this month that we are expecting certain things to happen, and we just adjust our long-term trading and our day trading with those expectations. One thing that is guiding a lot of and will be guiding a lot of my trading in the next few months is the fact that we are entering into the worst 6 months of the year. Throughout the almanac, if you go back to 1950, there are seasonal times when the stock market does better at certain parts of the year than at other parts when it doesn't. And the November to April 6 month area has seen exponentially higher returns than the May to October area, and it's been given the adage on Wall Street, sell in May and go away. And kind of the economics behind it is the fact that it's the end of the year. Traders from these companies, they go on vacations too, and trading volume just decreases, and so that affects the prices of, if there's not a lot of trade, volume runs everything. That's another thing that our group, volume,
You said
sentiment, and
volume.
timing. volume
Yeah.
volume sentiment, and timing is what we trade on. And
Write that
volume
down, guys. Volume.
volume runs everything. So if the volume is historically, statistically, since 1950 low in uh, between May and October. And I mean, here's the data to back, like, um, my bias even going into the month is at best neutral. Um, at best, it's neutral. So I'm expecting a red May. Um, so even going into anything, I guess I can give um, this point too. Yeah, it's big, referred to as the beginning of the summer. So you know, if there is a rally, um, but it's not followed through, it's not strong, and it don't pass those key support resistance points, which the S&P 500, it did not clear that support and resistance level, that major support and resistance level that history's shown that it could break down.
What's
So
that number, man? Because I had a number on the S&P, man, that it was hovering around and it just was failing. Let me let's
so
see.
yeah, I can't give too many
No. Don't worry.
too
No.
many nuggets, but there are certain times throughout May, and throughout the year where we expect bearishness and we expect bullishness. And some of the people that were in my network and on the network call were able to see kind of the data that we get it from, and we're kind of able to see it visually. So I know
We're at a breaking point,
um,
man.
we I know what I'm expecting.
Yeah.
Um, and at least every day when I'm going in, I know the night before what what to expect for this next day. Even for our report, is for crypto and stock traders, we have daily, day by day, what to expect in the market, what's going on, what to look out for, should you want to enter a trade on that day, if you're a day trader, or if you're looking to go swing, what should you be looking at as you consider
I
going
used to
into that swing
wonder
trade.
why. I was like, how are you so? I was like, how is he so just laid back when he's breaking down the market? Like we would talk, and then I realized. I mean, I'm big on preparation,
Mm,
but my goodness, man, when I saw the way he prepped for, and it wasn't just for like the next day, because most traders we're prepping for the next couple of days. You might look some long term things, but a month in advance, 2 months, 3 months out, and you go on historical figures, that's when the calmness came in, and and I was like, okay, there's some things that are happening that he's expecting, and I started calling him the almanac, man. So, but back to you, man. I had to say that. So,
Um,
the,
no, I was just pulling up the chart. This is we talked about the alligator earlier. This is kind of what our alligator looks like, and how we use it to tell I guess bullish trends or bearish trends. Um, and right now, like I said, it did not clear this major support resistance point um, here. So the 2800 level, between 2800 and 3000, we should have seen a strong push here or here uh, to push back up above this previous level here. And that's what we did not see. And so, you know, April was bullish, as expected historically. Historically, April is a bullish month. So it, I was intrigued by the bullishness, but still kind of expected it. Intrigued because with everything going on, like there's some reasoning behind this bullishness due to the tax deadline. And with that being moved, I didn't know how the market would respond to that, but I mean, it's still, it kept with history, I guess. Um, and I mean, just looking at this S&P 500, it's sitting at a resistance level right now between this 2800 and like 2950
Right.
area. I don't I don't expect it to hit this area anytime soon again, in my opinion. Like mm, September, October. Um, yeah, I don't see it coming back up here. And I could be wrong. Y'all could timestamp this and save this video, but I don't see it reaching back to this 2950 area anytime soon. Um, the market is, I mean, we're creatures of habit, and the market is ran by human beings, and trading since it began in the 15, 1600. Well, you can even go back to it's all based on emotion, human emotion, fear and greed. That's what move these prices. So um, we never change. Nothing changes under the sun. We all the same. So I have my particular expectations, and depending on everything that's going on currently with the market,
Yeah.
is how I plan to advance. I'm not looking. I don't see green in May, so my thing is any position I take is going to be any position that I take is going to be um, with a bias that there's going to be downside in May. Um, so any long position is going to be very, very, very short lived. And shout out to the group because we know we can expect what days to go long, but we
Right.
also you know just um, looking at just looking at more red this month. And the history, it backs it up. You know what I'm saying? Since 1950 in presidential election years.
That's key.
May is the number 11 Dow month, meaning that out of all 12 months of the year returns, May ranks number 11 on the Dow, number 10 on the S&P, and number 8 on the Nasdaq since 1950. Like, I'm not expecting May to be a great month. So, no matter what my trading, no matter what you're trading, no matter what stock it is, like there are other industries, and I kind of go through, and like if you look at the sector seasonalities, certain ones that are strong. So if it's a rally, I kind of know what sectors I might look into to get into for that rally. But it don't matter what it is for this month. I'm they're gonna have to show me. It's gonna be show
Yeah.
me
Yeah.
St. Louis
With
before anything is going on. So
okay. That this we're at that point, man, right now tonight where we've extended them. But
yep, I
this,
agree.
I want to just say this to everybody: what Mo's breaking down, that's a daily thing for him, daily thing for myself, especially during this time frame. I'm gonna leave my email information again. This is if you want to get on the mailing list, just click the link that's in the chat bar. Go there, fill it out. And whenever we do a Zoom call, an episode, you'll get the link with the
Yep.
password. And I'll also I send out, if it's not every day that I send out an alert, but every few days, if something is going in the market, if something hits my attention, uh, I'll add you to it, and you'll get it. Whether and it's going to be something dealing with education and learning,
Hmm.
and idea generation. And then if I'm making a trade, like last couple of weeks, I called out a couple of trades. But when you set your trades, guys, you want to study, and you want to set parameters where you enter, and what you're going to do, how much you're willing to risk. And
Hmm.
the next thing I want to put in the chat bar is also is going to be my the link to my podcast where you can have some information. I've done it an options one. The
Sure.
link, the direct link I'm doing for you is the one that that is the interview that I had with my son, which
Awesome.
is, I love that one. That was where we just break it down. So go to that one and sign up, subscribe to that. And when I put out a new one, but mostly I hadn't been putting out a lot of new podcasts because we're mostly going with the market wrap up with Mo and myself. And I'm enjoying that you guys came in here and spent all this time, man.
Man, thank y'all. I'm surprised that I thought I would see the numbers start falling off,
And they
30
holding
minutes ago.
strong.
So I
And
appreciate y'all. Real quick to Mark, I just seen your post in the comments. JD had the RSI. For me, at the bottom of that chart, that specific one was MACD. So with the alligator, I use MACD. I use RSI with the Ichimoku cloud. That's another chart I look at. It just depends on the stock, the time frame. So yeah,
MACD. Hey, Mark,
MACD.
you can look it up on investopedia.com. MACD.
Yep.
Let's see. And I mean, it's basically it's a convergence divergence, man. It's you're gonna see the trend and the movement of the. He broke down fund flow. You're gonna see whether it's that money the people are exiting these.
Basically,
If
if
it's
they enter in,
weakening
they're
or
coming out.
yeah, and
Yep.
that's when if you're gonna start trade. If people, a lot of people come into as newbies, you don't have a big account, and the shiny object in the room other than options is penny stocks, man. You're like, you know what?
Man,
If I get in
penny
it,
stocks is for rich people. Like value, man, price and value is relative. So if just because it's low price don't mean it's cheap. Like or I mean, and
it's
just
the
because it's high price don't mean it's an expensive stock.
right.
Like, in my opinion, Amazon is kind of a value right now where it's traded, but it's a $2,000 stock.
Yeah,
So like,
absolutely. Pull
and
back.
JC Penney is 25 cents, but I wouldn't touch that with a
Wouldn't
10
step
foot
in
pole.
there.
You know what I'm saying? So yeah, man, y'all stay with just be careful. Know what you're getting into. Know what
Yeah,
you
man.
get.
I got a sweatshirt from J.C. Penney's a long time ago, man. It didn't even fit right. Anyway,
And that's not to poop on people that do trade penny stocks because it is a
there's a group.
strategy to do it. Like,
There's
but you got to, there's a certain way to do those stocks
right.
versus, large caps or mid caps and any other. So know what you're doing. If you're going to be successful in that, get with people that are successful in penny stocks.
Who make a
And
market in that. Well, guys, put it in the chat bar if you guys enjoyed it. A lot of you let us know. I
yes.
mean, Tammy, thank you. Charlotte, thank you
Post
very
up in
much.
the groups if y'all enjoyed it, please. And
Yeah,
if
let
y'all
let the
interested
folks
in the
know on the
network or the
BSI,
report, reach out. I'm here.
Selena, thank you for coming. Kylan, thank you. Kevin, Mark, and we're gonna shut it down. But if you see someone in BSI that says, "Oh man, you ought to give out the free stuff," and
Man,
it's
tag
info
them.
right there, man. We come
Yeah,
every
tag us and
yeah.
Steph, and we're gonna sick Steph
Yeah,
on
yeah. King Steph will go
them.
at them, dog. Y'all, we are in this arena. We are in this arena. We can make a change for our families.
Yep.
Make a difference. If we have questions, we can just push it forward. So blessings to you guys, man, and stay safe out there. And
All
thank
right,
y'all.
all right.
Stop the recording right now.